The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. It's Sunday. Perfect time for a little mindset reset. Just before we start a new week, a new timing cycle. Today we're going to have a little humor and just enjoy ourselves a bit and just relax and take a step back and understand that the trader truly is the number one variable. I'm going to poke some fun at myself today, and we're going to have some fun and just look at some simple concepts and also how ridiculous retail traders can make things and turn things into a quagmire of mental and verbal gibberish instead of just keeping things really, really simple and pleasurable and profitable. Essentially, there are two types of day traders. There are ones that are focused on 1% progress every single day. They have a plan, they have a strategy, they understand the money-making setups that they're hunting, and then there are other traders who head to the screen each day. They do all kinds of random, impulsive things at the screen. They have no real plan. They have a plan. Some have a plan, but they don't actually stick to it. But then they also are their own worst enemy. They will continue to do all the things they know they shouldn't do, and then at the end of the week, start the process again on the weekend. They'll go study, they'll review everything, they'll say, okay, this week it's going to be different, but then they'll go back and do the exact same things. Now let's just start off with something really simple. I'm going to throw people's community comments up, and I'm going to try and create an understanding for traders that they themselves are their own worst enemy. Everything that I have done has been about simplification for myself so that I can come back to the screen each week and each day and each session that I'm trading with the same simple approach that I am hunting the same easy money-making setups. Now here's a great one to start with. Stacey is a scam. Can't you see that? And my response to that is, okay, well, fair enough. Maybe I am a scam. But what money-making trading setup do you look for each week? That's a simple question. And if I'm a scam and traders are out there with a different perspective on things, I'm just curious. What is the money-making trading setup that you look for each week? Now, I talk about following a basket of instruments and using signal days to help identify the highest probability/possibility days that may offer us a full daily range, whether that's a reversal, a range expansion opportunity, or a session scalp or A++ setup for a range trade setup. Inside days are just one example. We can look at any daily chart and identify inside days, and there are usually in multiple cases, if you have a basket of instrument, you're going to get one or two of those, a minimum a week, on major currency pairs, energies, indexes, metals, or commodities, or cryptocurrencies. The whole point is to be hunting the highest probability setups on the day in the session that I'm trading, regardless of whether I'm trading Asia, London, or New York. And when we get a signal, whether that's an inside day, whether it's breakout traders in the market, whether it's a first red day, a first green day, and then whether or not it sets up into our session to target the highest probability opportunity for an explosive parabolic move. And then whether or not once we have a signal day, if that transforms into an opportunity, comes up on our watch list. Now you could be trading Asia. Some traders may have what we've talked about in the previous video, a session scalp, or other traders may be looking to scalp a reversal, an A+ setup, or traders in the US window, now that we have our dump, coil, and pump, our trap and shift template at the levels in the timing window may have the scalable A++ setup for a session range trade, a range expansion. So here's a trick question for traders. What money-making trading setup are you hunting? So the scam could be that the trader actually isn't hunting anything. And in between, they can't sit on their hands and they do other random impulsive trading. So I suggest that if you can't answer that question, then perhaps the real scam is the trader themselves, fooling themselves that they don't have a daily process, they don't have a daily routine, they don't actually really know which setup they're looking for, and when it comes to their trading time, their session, their Asia, London, or New York, they're just randomly looking for trades on something that is moving. When a trader gets behind the keyboard, the real question is what setup are you looking for? What instruments are on your watch list for the highest probability/possibility opportunities? And then when that setup presents, do you understand the timing, the levels, and the behavior of price to execute that trade setup, and where you should be managing your risk and taking profits? Entry criteria, risk management, and where you're going to take profits. So let's go back to that first sentence. Stacey is a scam, can't you see that? Again, what money-making trading setup are you hunting each week or each session that makes you money, that has entry criteria, risk management, and take profit rules? If you can't answer that, then we go back to the response, okay, what money-making setup are you looking for each week? If you can't answer that question, that has nothing to do with me. Stacey's jargon is so confusing. I am educated and have been trading for years, and I find his terms confusing. And my response to that is, okay, well, let me simplify that. Where do you buy and sell? What money-making trading setups do you hunt each week? At the beginning of the playbook, there's a basic glossary: high of week, low of week, high of day, low of day, high of session, low of session, resistance, support, inside bar, inside day, peak formations, high bull, low bear, break in structure, major red news, opening range, pump and dump and pump, low hanging fruit, false break, Asia, London, New York. So, okay, I guess some of that could be confusing. If we go back to that statement, the most important thing to take away is, where do you buy and sell? How do you determine where and when you buy and sell? And then going back to our previous slide, where do you enter the market? What is your entry criteria? How do you manage your risk? And where do you take profits? That's the only thing that matters. There's nothing else really to say. Where do you enter? How do you manage your risk? And where do you take profits? This is a scam. Okay, let's go back to just a basic understanding. Let me explain something. The reason why I simplify this into a weekly template for myself is that obviously we know that the markets have movement each week that's set up into certain patterns and templates. But for me, this simplifies it. I can come back to the screen each week and start the week off, knowing that Monday starts the new week. That's the opening range. And it's all based on Friday's closing price. So we can look at any instrument and we can take Friday's closing price and just project it across for the entire week and use that as a reference point. Why is that a reference point? Because when the market closes on Friday, that is what everything is based on when Monday morning opens. We can look at any instrument. We can look at currencies. We can look at metals. This is gold. We can look at an index. We can look at oil. We can see that Friday's closing price is the reference point. 1 hour charts. Tuesday, day 2 typically expands the range. Wednesday is the middle of the week. So that makes basic common sense that it's the midpoint and a reset heading into the backside of the week. For me, this is what my approach is because I'm looking for 3-day setups. I'm looking for 3 session setups for parabolic opportunities, whether that be in Asia or New York, front side or back side of the week. We just saw an inside day examples. We have breakout traders in the markets, or first red day or first green day at extremes on the daily time frame. We've talked about this in the higher time frame videos. And just as an example, we can look at oil. This is an example of a high of week, a new week, Monday, breaking out and offering traders a reversal on day one, a day one trade setup in oil. But then in a more simple understanding, we can just take this across now. We have breakout traders in the markets on Tuesday, day two, expanding the range. Wednesday, continuing to expand the range. Day one, day two, day three, forming a peak formation, pulling back inside of the range. We had a market that closed in breakout on day two on Tuesday, closing outside of the opening range, forming our initial balance. Page 26, the opening range and initial balance. Now, typically, one of those extremes may tend to hold in a high percentage of situations. Day one, day two, day three, front side, resetting. Day one, day two, on the back side, reversing the range. Midpoint range, Thursday, day two, we can typically look for range reversals on certain instruments. So again, the question is which setup are you hunting? And is there an opportunity in the session that you are trading? Timings, levels, behavior of price. And then heading into Friday, the closing range of the week. We had a market that closed in breakout on Thursday. And then pumping back up towards Friday's closing price and Monday's opening range. We had breakout traders in the market for a reversal back to the low of day level, a 3-session setup on Free Cash Friday. Just a simple dump, coil, and pump, and a Friday reversal opportunity for traders on spot Brent. Now the NASDAQ traded down from the high of week level on Friday, the closing range of the week, breaking out of an inside day on Thursday. Inside day is a signal day. So you'll notice that we're focused on the close of the day. That's what gives us signals on the higher time frame. Not chasing movement each day. Which instrument has given us a signal from the higher time frame? And then how does price set up on the day in our session? Monday, day one, we have breakout traders in the markets on Friday. They break out again on a gap, which Al Brooks would call a bear candle down on an opening gap to the downside. Higher highs heading into our New York session. But also, just in simple terms, breakout traders were in the markets on Thursday. We had a market that broke out. It's an inside day. We have inside day traders now on higher time frames in the markets. No smoke and mirrors, nothing's hidden, there's no scam. What thesis, if a trader's trading the indexes, do we have? Now the best part, this is a 1-hour chart. Heading into our 10 a.m. club, we have a 1-hour pin hammer candle. Now obviously when traders develop the expertise, it's about the levels and the timings. So when you understand the higher time frame and the patience to hunt out these setups, your expertise will allow you to finesse a better fill on these opportunities. But for simple terms, a very simple scalable model can be utilized with the higher time frame. If we're going long, pin hammer, entry, stop loss, and a take profit level. Now I want to emphasize to traders, we have a signal day. We have a day one breaking out of the low of the closing range of the week in a market that continues to make higher highs and higher lows. Day two expands the range, putting in a higher high and a higher low before dumping back down into the New York Open on Monday, day one, day two, day three, reset a first green day. So where other traders are trading all the movement inside on the smaller time frame, the daily signal is based on the close of the day. Based on the close of the day. The 1-hour chart just allows us to see the template. But one of the challenges traders have is they're actually trading the movement on the smaller time frame, looking to catch a move. But I'm telling you to stand back and look for signal days or understand the weekly template. Wednesday's a reset day. If day 2 typically expands the range, we can be looking now on the backside of the week on a breakout pullback for a trend trade continuation. Now this is an hourly chart again, and obviously traders who are trading with size will want to finesse a better entry, but we have our pin hammer again. Simple model for trade entry criteria on a higher time frame, even our 10 a.m. club for an entry, stop loss, and a take profit level. Traders on the smaller time frames obviously have been able to scale in and get a better fill, manage their risk better. Timings, levels, behavior of price. We already have breakout traders in the markets on the smaller time frame. Breakout, pullback, continuation. Markets only do 3 things, whether you're trading your favorite instrument or you're hunting one repeatable, scalable, simple money-making trading setup. Keeping it simple, regardless if a market's in the trading range, whether it's targeting breakouts that fail, or if we're looking at markets that are trending, breakouts, pullbacks, and continuation. Any market, any instrument, they all do the same 3 things. Okay, I could be a scam, but what's the money-making setup that you hunt each week? Which setup are you hunting? Can you show me a printout of that setup that has occurred previously, whether it's your favorite instrument or the same instrument? Is it an A++ setup, an A++ setup, or an A+ setup? We talked about that yesterday. Just a simple understanding. I got a lot of questions yesterday. How do you differentiate? If you're asking how you differentiate, again, I asked the question, what setup are you hunting? Because it's well defined in the playbook. These are shorting examples, but that's going to go from one extreme to the other of a daily range. The A++ setups, we're going to watch it wipe out an entire week in a matter of hours. And an A+ setup is going to be a session trade where we're either having low-hanging fruit, a nail and bail opportunity. Now the range expansion, which we saw in the Aussie dollar, is an example of that. The range reversal, the session trade, is what we just saw in spot crude. We're in a 3-session setup. We've traded back into the opening range. The 10 a.m. club has stepped in, and we're targeting a range reversal for a session trade. We have our timings, our levels, and our behavior of price. Now, we can put our basic model for trade entry criteria, page 29 in the playbook. But it depends on whether or not traders were hunting this setup. What was the signal? We had a daily close in breakout. How did price behave on the day? Well, we come to the screen in New York and it's already trading in breakout. But that breakout is traded up into the opening range and given us the reversal setup. High of day to low of day, session trade, a range trade. If you don't know what you're hunting, you're just going there to take trades. So let's say I am a scam. Let's say that my jargon's confusing. I simplified that to where do you buy each week or where do you sell? What are your money-making buying setups? What are your money-making selling setups? I'm not sure which part of that is confusing jargon-wise, but let's just keep it as simple as possible. What is your buying setup that makes you money? What is your selling setup that makes you money? Now, a really important thing to understand is breakout traders being in the markets and the patience to allow templates to set up. We've talked about this, just recognizing when daily signals give us the information that we need. So we have markets that close and breakout. One of the questions that I keep receiving is, I'm not sure what you mean by closing and breakout. So if you go back to a daily time frame, everything is based on the daily time frame. Everything in the playbook and the masterclass is based on the daily time frame. We get signals, markets that close in breakout. If we have markets closing in breakout, they're going to either do one of 2 things. The breakout will succeed or the breakout will fail. Now here's the best part. It's not Wyckoff, it's not Taylor method, it's not smart money concepts, it's not supply demand. It's a daily signal. So we can complicate it with everything else. But again, I keep saying to traders, what setup are you hunting? So when we have information given to us by the market, and we have breakout traders in the markets, and we start new week, new timing cycle, and breakout traders are in the markets, and then we have our opening range, we may have an opportunity for a session trade from a level with daily signals already having given us that information. At the close of that day, we may now have another daily signal, a first red day. A first red day is a high of day, high of session shorting opportunity if indeed it presents. And if the train has already left the station from the level, then we're looking at the low-hanging fruit opportunity. Day 1, day 2, we now have our opening range and initial balance. We have breakout traders in the markets, higher highs and higher lows, and we have day 1, day 2, day 3, an explosive reversal on day 3, back up into higher level shorts, but we also have day 1, day 2, and on Thursday, day 3, breakout traders in the markets back into where the original breakout long occurred. Higher time frame buyers. Breakout traders have been stopped out. Day 1, day 2, day 3 days of breakout traders in the markets. How does price set up on the day? We have a New York session reversal opportunity for a session trade. So we have a reversal opportunity back into our London session shorts, closing back inside of the range. We had our trap and shift back up into Friday's closing price, where everything started from. Day 1, day 2, day 3, reset. Day 1, day 2, day 3. Is SB a scam? Or do retail traders not have a plan? Or do they have a plan but they can't stick to the plan? Or do they stick to the plan but in between or during trading they do all kinds of other irrational, impulsive, self-sabotaging, emotional, behavioral type of things? Or do they do everything right for a while and then they do damage? That's a scam. What is it that I'm doing that's a scam? See, it takes a while to hardwire your nervous system, your brain, your routine, your process, your mindset to be hunting money-making setups and then in between doing nothing else. It's a really simple equation. Only hunt money-making trading setups. Stop taking random impulsive trades. Master your emotions and your behavior everywhere. In between your trading, during your trading. Master the expertise of live time execution through repetition, through building your muscle memory. Master scaling your trading setups in size. Master everything. Now here's one of my favorites. If SB doesn't like a comment, he just blocks you. Now that's not true. I try to answer as many questions as possible. And most of the questions, a lot of times if they are not answered, it's because they've been gone over in multiple community posts or in the videos multiple times. But I consider ignorant, derogatory behavior, individuals with long-term cognitive dissonance, and degenerate trolls like a bad trade. I cut them immediately. They have zero value. If you hold losers, the losers usually get bigger. If you hold on to a losing trade, chances are that losing trade's going to get bigger. So I cut them immediately. I'm looking at the next person, the next trade that can benefit from the community, that we can make money from a trading setup, a winning trading setup. And as I always talk about, stop taking losing trades, which means stop random, impulsive, degenerate gambling trading. If you have degenerate, derogatory behavior, long-term cognitive dissonance, as Ed Sekoda says, everybody gets what they want from the market. You can't fix long-term cognitive dissonance. Degenerate trolls that are there specifically to create disharmony and antagonism. So, like a bad trade, cut it immediately. Cut and forget, move on to the next opportunity. Now, in closing, again, we titled this Mindset Reset to frame our minds for playing to win. Playing to win as the new week is about to start. There is no scam except the story traders tell themselves. There are traders in this community that have bulletproofed themselves for success through repetition, building their muscle memory, through hardwiring their nervous system, through doing the hard work in live time, through fighting impulse and urge to stop taking other trades and focusing on rinse and repeat, easy money-making trading setups, developing the skills, their mindset, behaviors, and expertise and confidence to master their craft. Playing to win. There's nothing confusing. Which money-making setups do you hunt each week? What random, impulsive, degenerate, self-sabotaging behaviors need to be worked on or removed completely? Which lifetime skills do you need to develop to become a master of your craft? And what can you do to become 1% better every single day in all these aspects? There is nothing hidden. There is no scam. There is nothing new under the sun. But what money-making setup are you hunting? And in between, doing nothing else but sitting on your hands. Playing to win, traders, as the new week starts. Playing to win or not playing at all. Keep it simple. Master your craft. This is a winnable game. Let's have the best week ever, and may the markets go with you.